Welcome. We've received some really interesting material from a listener. It's an analysis focusing, well, pretty squarely on Bitcoin.
Yeah, and it's from let's say, a prominent firm. Manages quite a lot of assets.
Right, a big player. So this isn't just, a casual opinion.
Not at all. It's a view from institutional finance, which gives us a peek into how they're starting to frame Bitcoin within the whole digital asset picture.
Exactly. So our aim today is to sort of unpack what this analysis highlights about Bitcoin, what makes it different, especially this idea of it being a store of value, and why might this particular perspective, from this source be valuable for you, our listener, to consider. Let's get into it.
Okay, so the central theme in this analysis seems to be Bitcoin's potential as a store of value. We hear that term a lot.
We do.
What does it seem like they mean when they use it here?
Well, fundamentally, a store of value is something you can hold, and it keeps its purchasing power over time, more or less reliably.
So it doesn't just disappear or get eaten away by inflation too much.
Oh.
Precisely. It resists losing value, whether that's inflation or the asset itself, degrading.
And the source seems to think this is a pretty rare quality, even in traditional finance.
That's a key point they make, yeah. Finding true, dependable stores of value isn't easy. And they argue Bitcoin has shown signs of this. Quite dramatically, actually.
Especially compared to, say, gold, which is often the go-to example.
Right, that's the comparison they make. And it's quite stark.
How does the source say Bitcoin compares performance-wise recently?
Okay, so the analysis gets specific here. Over the last 5 years, they point out gold had a, decent increase, about 57%. Respectable.
Okay. And Bitcoin?
Good coin, in that same 5-year window, of 951%.
Wow. 951% compared to 57.
That's a huge difference.
So that performance must be a big factor in why this firm is looking at Bitcoin through that store of value lens.
Absolutely. They seem to see that track record as, well, evidence. Evidence that Bitcoin might be operating differently, at least in this specific context, compared to many other assets.
Okay, so let's unpack why. According to this analysis, what gives Bitcoin this unique quality? What are the core strengths they point to?
The analysis really focuses on 3 things: scarcity, decentralization, and security.
Right, the big 3.
Yeah, they frame these as the foundations, the bedrock for its potential, not just as a store of value, but also as what they call an aspiring monetary good.
Scarcity is probably the one people grasp most easily, the limited supply.
Exactly. They emphasize the hard cap, just 21 million Bitcoin.
Yeah.
Ever. Full stop.
That's baked into the code, right?
Baked in.
Yeah.
And combined with how new coins are issued, that predictable slowing rate, it's designed for scarcity. The analysis even mentions some observers think demand is getting so high we might actually, run out of Bitcoin readily available to buy soon.
Out of Bitcoin to buy. Yeah, that catches your ear. Okay, so fixed supply is crucial. What about decentralization? How does the source explain that?
Well, they link it strongly to proof of work. That's the consensus mechanism.
The mining process.
Essentially, yes. It means the network is run and secured by this huge distributed group of participants, all competing, not by one company or government.
So no single point of control.
That's the key benefit they highlight. No intermediaries. No central authority that can just decide to print more, freeze funds, or switch it off.
Which makes it resilient, presumably.
Very resilient. And resistant to censorship or manipulation, which, leads right into the third point, security.
Yeah, you hear a lot about crypto security concerns, but this analysis seems to see Bitcoin security as a plus.
A major plus. They argue the network has become incredibly robust, practically impossible to compromise now in a meaningful way.
They talk about that 51% attack idea.
They do. That theoretical risk where someone could control most of the network's computing power.
But they say it's not really feasible anymore.
Basically, yeah. The source explains that the sheer scale today, all the miners, the nodes, the massive computing power, which is the hash rate.
Right, the hash rate, the total processing power securing the network.
Exactly. It just makes that kind of attack incredibly prohibitively expensive, astronomically so.
Ah, so the cost is the barrier.
A huge barrier. And the source actually connects that rising hash rate to the Bitcoin price rallies we've seen. They suggest it's kind of a positive feedback loop.
How so?
Well, a higher price encourages more miners to join, which increases the hash rate. More hash rate means stronger security. Stronger security boosts confidence, which can support the price. It's this virtuous cycle they identify.
Okay, this is where it gets really interesting, I think. How does this analysis position Bitcoin relative to other digital assets?
Well, they definitely acknowledge others exist and have been successful. Ethereum gets a specific mention, recognizing its importance.
For things like smart contracts and DeFi.
Right. Its role in the wider ecosystem.
Hmm.
But the analysis is quite clear. While others have done well, none in their assessment have shown the same conviction as Bitcoin, specifically when you're looking for those store of value characteristics.
So it's about the specific job. Bitcoin's design, the scarcity, decentralization, security focus makes it uniquely suited for that role, even if other chains are better at other things like speed or features.
That's exactly how they seem to frame it. They're judging by that specific yardstick potential as a store of value, and Bitcoin's design comes out on top in their view.
But it's not all glowing praise. The analysis mentions a weakness.
Right. It's not entirely uncritical. They bring up what's known as the blockchain trilemma.
The trilemma. Okay, what's that about?
It's this common idea in the space that blockchains often struggle to perfectly balance three key things at once: security, decentralization, and scalability.
You usually have to trade one off against the others.
Often, yeah.
Yeah.
It's hard to maximize all three simultaneously. And the source suggests that while Bitcoin really nails security and decentralization, its current main challenge, according to them, is scalability.
And scalability just means how many transactions it can handle, how fast.
Pretty much, yeah, the network's throughput. And they give a pretty stark comparison.
What's the comparison?
They note Bitcoin processes, roughly, maybe
Yeah.
3 to 7 transactions per second, TPS.
Okay, 3 to 7. Seems slow.
Well, compare it to what they mention next. Newer chains, like Solana, for example, they're designed for potentially thousands, maybe even tens of thousands of TPS.
Wow, 3 to 7 versus, say, 4,000 or more. That is a huge gap.
It really highlights the difference in design priorities. And the source kind of ties this back to Bitcoin's strengths.
How?
They suggest that the very things that make Bitcoin so decentralized and secure, that proof of work, the distributed validation, inherently make it slower than systems that might perhaps centralize things a bit more to gain speed.
So it's a trade-off, the trilemma in action. You get rock-solid security and decentralization, but maybe sacrifice some speed.
That's the trade-off they identify in this analysis, yes.
So pulling this all together then, what's the final verdict from this asset manager? What's their overall feeling about Bitcoin's future based on this analysis?
The overall sentiment is clearly positive. The source explicitly says the firm holds Bitcoin in high regard.
High regard. And they link that directly to the features we've been discussing, the scarcity, security.
Absolutely. They project that Bitcoin's value has potential to continue to rise in line with its growing utility and scarcity. It's a very direct connection they draw.
Between the fundamental design.
Right. The fixed supply, the security, the decentralization, which they see, creating utility as a reliable asset, and its potential for future price growth.
Did the analysis mention specific price predictions? I know sometimes these reports do.
It did touch on some, yes, but they were careful about it.
How so?
They included examples of predictions from watchers or analysts out there in the market. You know, figures like $200,000 maybe this year, or even $1.5 million within 5 years.
Big numbers.
Very big numbers. But crucially, the source stated these were not the firm's own official forecasts. Their analysis focused more on why the value might increase the fundamental drivers, rather than nailing a specific number.
Got it. So the focus was on the why, based on scarcity, security, decentralization.
Exactly.
Yeah.
That's what's fascinating. They see those core characteristics not just as tech specs, but as the actual engines driving potential long-term value appreciation.
Okay. So wrapping up, what does this all mean? We've explored this asset manager's view, seeing why they highlight Bitcoin, especially as a potential store of value. We talked about those key strengths identified in the source, that hard scarcity, the deep decentralization, robust security.
And the trade-off, too, the scalability point, compared to faster chains like Solana.
Right. And ultimately, a pretty positive long-term view based on those core fundamentals presented in the material.
Yeah. And, you know, this analysis really brings up an interesting point for you, the listener, to think about as you continue learning.
What's that?
Well, if this perspective positions Bitcoin's main strength, its core value proposition, as being this digital store of value because of its fixed supply and security, how does that contrast with the focus or potential of other major digital assets?
Like Ethereum or Solana.
Exactly. Assets designed maybe with different goals in mind, speed, flexibility for applications, that sort of thing. If Bitcoin is potentially digital gold, what are these others aiming to be? What different aspects or use cases might you want to explore next, given these distinctions in design and potential purpose?
That's a great question. Thinking about the different potential roles these assets might play, definitely something to consider. Well, thank you for joining us as we unpacked this particular analysis today. We hope this exploration gives you some valuable points to consider on your own learning journey.